Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 9th of November, 2023. Thanks for joining me this morning on a beautiful day here in Chicago. This is episode number 2571. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we have here? This morning, we do have risk ticking up pre-market. We're seeing better ranges, but still the market's in rally mode here. So we have mild risk on sentiment. Nothing really dramatic to speak of pre-open on earnings or anything like that. But we did have China report on inflation. Inflation came in weaker than expected in a deflationary range. Also, Disney reported yesterday strong earnings, slashing costs, really bucking trend from what Warner Brothers before them reported. Mostly a quiet morning overnight, not too much as we said earlier in the week. Really, it's a digestion kind of week. The market's still pricing in diminishing odds of a rate hike, with crude falling dramatically. It was only about 4 weeks ago when everybody and their mother, in terms of analysts, were predicting crude is on its way to 100, and to brace for that. Clearly, we're way off of that. So the price of crude, of course, is inflation, is supportive of lower inflation, is supportive of lower costs. The Fed holding is supportive of growth somewhat, but you can also read that as the Fed is just going to sit there and squeeze. Think of it, I don't know how many Simpsons fans here, when Homer Simpson strangles Bart. Think of the rate hike level as the grip on Bart's throat, and think of what's happening now as the amount of time that Homer would grip Bart's throat for. How long does it take to squeeze the life out of that obnoxious kid? Terrible analogy first thing in the morning, but it was very visual in my mind, and I had to explain it. We have Fed's Bostic this morning at 9:30. In about 20 minutes, 25 minutes, we have Fed's Barkin at 11. There's been a Fed parade. There's been a dozen or so Fed speakers this week. ECB's Lagarde at 12:30, and then we have Fed's chair on a panel at 2 p.m. And then we finish up with the Australian Reserve Bank of Australia statement on monetary policy. Not expecting any surprises there. Powell, people are going to pay attention. But his narrative is not going to change from what it was last week. So it's going to be, we're watching the numbers. Yes, we're going to stay vigilant and and that a rate hike is not off the table, but the market's not buying that. In fact, I wanted to show you this. This is the yield curve. I really like this service. I've been using it for about 20 years, this chart. So if we go back to, say, September of this year, to the left is your yield curve. This tells you what the interest is on the various durations, short durations to long durations. So, 1 month, 3 month, 2 year, 5 year, 7 year, 10 year, 20 year, 30 year. There's also the ultra bond, but it's not represented. But you can see in August here, very clearly inverted yield curve. This is quite bearish. And as we move forward through August, you can see that yields on the 10 and 20 the 5, the 2 are still relatively high. We see short-term yields still higher, but as we come into the sell-off from balance, which is where we were before in the 4,400 range in the S&P, we see that yields are actually squeezing higher. So you see that the 20-year, 10-year, 30-year, 5-year, 7-year, all pushing higher versus September. See how September's below 4.65, and they push even higher here. This is this is pain on the market, right? But since then, so we see 6th of October, squeeze, 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 and then we get last week's information, right? And then you could see how the yield curve is cooling off. See how it's starting to come down. This is the futures pushing up. This is the yield curve. The yields on the long dated products or across the curve falling off, and this is of course what the market wants to see. So the market's going to pay attention to how that yield keeps moving, because it really dictates the cost of doing business for all businesses, small caps, techs, anything that is capital intensive is going to be very yield curve sensitive. So that's that. So we talked about the Fed's chair. Pay attention to that. 2 Eastern. S&P, another overnight session with drying volume, low volume, better than what we had yesterday. The inventory is 37% long with a range of 22. If you recall, yesterday it was like 13. So it's expanding a little bit. Let's take a look at that. This is crude. Let's look. So here's what the overnight session has developed. It's created a multi-distribution in the ES, unlike the NASDAQ where it's pretty much balanced. Multi-distribution has pushed through yesterday's high at 4407.75. So we're continuing to do this thing where we trade, where the yellow bars, the yellow bars that you see there, the faded yellow bars, those are the initial balance. So you know that's the beginning of the RTH session. So you look at these yellow bars and you look at where we finish, higher, we end up squeezing higher. This day here, we had an inside day. We talked about this quite a bit, and then we expect the break higher. We break higher, and then the overnight session holds those high prices. Yesterday, we pushed even higher to 4407.75. Remember, we talked about this MC point of control area of 4400, which has shifted actually a little bit lower now with the new information, 4402-ish. We expect the market to kind of be stuck here, right? We expect the market to test and retest and at least rotate down. That's the normal habit for a market in a highly accepted area. And that's what we did yesterday. We did a good job of reinforcing this idea that we're running out of buyers or buyer aggressors, and we're not holding on to these higher prices very well. And yesterday it finally breaks down, but it still puts in a higher low versus the prior day, right? So the low 72.25. Yesterday, the low was 75 something, 75.50 maybe, 75 even. And then it comes all the way back. Really, really nice little mid pullback trade into the close, comes all the way back. And what are we doing? We're holding on to these higher prices still. And then the overnight session opens and it's holding on to these higher prices. So the squeeze continues. As I've been saying, it is really difficult to imagine that holding a swing short here is an easy feat. So to me, this is a market that's just not giving up any territory. It has not given up any territory in the overnight session on the buy side. And unless the market actually shows us that that's going to do that, it makes no sense to fade it, right? So decent, decent break lower, pull back to mid VWAP yesterday, continuation, breaks the IB, pulls back to in this case full session VWAP and so on, breaks lower and so on, and then finally ends up battling here, breaking above the what we call the DGPs, the day generated prices, pulls back to RTH mid right at the last hour, and then finally breaks higher into the closing range, back into the open. So yesterday had basically a long tail if you're looking at candlesticks. But if you're like me and you're watching the profile, that's quite bullish. This is quite bullish behavior. You see that went to D period, K period went to D period, pulled back, inside bar breakout. So a breakout setup here with an excess low. This low is pretty much set for the session. We have two TPOs right there at 98. We have an inside bar breakout. Look for the three tick range extension, and that's a breakout long back, aiming for at least the 4,400, if not the high. Of course, I mean the open. Of course, hindsight's 2020, and then the overnight session just continued that work. So it is really difficult to argue that that the sellers are just kind of showing up and putting up a fight. So you can see here that we are well into that early October balance up here, and we're holding steady in this range. We've shifted the point of control in this area down to about 97-ish, 96, 97. And we are trading above it here, and we continue to squeeze higher. So we're looking at a small gap this morning. The expectation this morning, the primary expectation, if things were to follow their usual, why do I not have, okay. If things were to follow the usual path, the expectation is we would open, we'd check higher right away, and then we would be responsive right back into the 4,400, potentially into yesterday's point of control. The point of control, the volume point of control at 95.50, TPO point of control at 93.50. So somewhere in this range here, and then hold steady and then grind our way up. Remember, we are looking at 18 to 20 as the next big test area above. Those are the multiple tops within that balance from early October. And right now we're just kind of sucking in a bunch of sellers to squeeze that. It's the way it looks. Be mindful, however, that we do have weak structure below. So if we look at the composite chart, there's the composite chart showing those days combined. This is a, let me adjust this so that it's not so squished. Let's go to 5 pixels per cell. And what you're going to see here is how fat that profile is. So there's a fair amount of support underneath us, fair amount of acceptance. So the longs are likely to feel protected here. But given the way we're structured, once it breaks through to the downside, it's going to be a quick squeeze below the current balance zone. So yesterday, as we pushed lower, it looked like, it was just kind of breakthrough. All it did is it rechecked the MC point of control for all the balance that has occurred since the gap up last earlier this week. We just simply checked it down here at 75, and we ended up coming all the way back to the open, and now we're gapping higher. So we continue to be strong. We're on the edge of balance for this big, or value for this big balance area from early October. This is the profile from early October. the balance zone, and you can see the top of it, and the monthly one-time framing down ends at 23, a break of 23 and a quarter. So we have about 10 points up before we've broken out of this balance zone. To me, longs are suspect. That's the overall picture here is longs are suspect. Yes, we're opening in a gap. Yes, we are very likely to respond, potentially squeeze higher. But to me, these buyers are likely to have to do a lot more work to be able to get to that 23 from here. I may be wrong, but that's how it looks like to me. It's they're having to work harder and harder and harder to gain those prices. Okay, so if you look at yesterday, despite the fact that we came back to the open, the delta remained negative. The very large lots, this is 100 lots or better, were just all over the place. Everything was pretty much all over the place. Large lots, which are 10 lots to 99 lots, were selling all day long. Small lots tried to buy. But overall, to me, this really smells of weakness as we push into these prices. We're coming into this really important area, and the expectation is it likely needs to pick up energy or chop around or consolidate or compress in order to be able to afford to push higher. Let's take a look at the NQ. NQ, same premise. If we look at the NQ on a composite basis, here's the NQ composite of what we've done recently. It's holding on to the upper side. Way back we have, we're open all the way up to about 460 or so. The NQ is doing the same thing. The NQ has really picked up a lot of strength over this week. But overall, again, I'm going to be suspicious of the moves higher on the NQ. It's come a long way with poor structure underneath, and you can see there are clear areas that the NQ didn't trade very well, and these to me are likely to act as magnets below as price rotates through. We have some clear targets, clear areas that the NQ is likely to test. Crude is actually surprisingly weak. The expectation yesterday with crude is that it would open, it would hold an open auction at the open, which it did. It created a beautiful open auction. You could see the open is right around the center of the IB, and then it extended down and finished lower on what is a box profile, shifting the point of control and closing right at the lower end of the range. This is surprising to me. Crude has come down quite a bit and is pushing into these areas down here. So I expected crude to hold this balance right here, this big balance area. And what it's done is it actually pushed through that balance area and settled below at 75.33, which was not expected. So now we're coming into this next balance zone between 74.40 down into 71.64.72. So crude is kind of surprising me a little bit in that the aggression to the sell side is quite strong, and it's really squeezing a lot more than I had expected, and I'm not sure what the story is. A quick look at those treasuries. Look at how these treasuries have rallied. I mean, the bonds have broken the last major high, and they've rallied quite a bit. This is a 1 hour chart, I think. Yeah, all sessions, and the bonds are rallying, which means that yields on the corresponding duration are falling, which is very business friendly. Here's the 10-year, the all-important 10-year has been rallying quite a bit. This is when we were selling off, right? We're selling off with the futures, because as the futures sell off, yields go higher, money becomes more expensive for that duration. And now, since the Fed meeting, we're on the opposite side. This is what's supporting, in my opinion, this is what's supporting the push higher. Nat gas, which by the way started trading micros and micro options this Sunday. Very interesting product. Trades pretty well. The micros have been trading pretty well. If you're looking to expose yourself to a very, very zippy, quick product, the micro NG is a pretty good candidate. Same story. Just the cost of gas is falling. This is business friendly. Same with crude. So we're seeing the yen fall. We're seeing the euro holding as the dollar becomes weaker against many, many other currencies. It's just the whole picture is shifting dramatically. I wanted to look at the composite for crude. Look at where crude is. Crude is right on top of the VWAP for the year. Right on top of the VWAP for the year. This is part of the reason I expected it to kind of hold this balance here, and it's just shifting very quickly. So if it gives up the next balance zone, which I talked about here, 74.50 or so to 72, it has pretty decent support right at the 72 area. Note that the most accepted price is 78, and that's 78.08, 78.10, and that's where I expected it to chop around. Crude is very, very likely to have a strong pop of about $2 or so from here. To me, it just looks like it looks like it's overshot to the downside on crude if you trade that product, based on that argument. That we've moved away from balance, and now we've moved through balance, but did not do the requisite, hey, check balance. Is everybody good here? Let's keep sucking in some longs or shorts and then break. It's just sliced right through balance, and in general that creates a recoil type movement back. So I'm looking for crude to just pop right back up into 78, the 78.10 area sometime soon, in a session or two. One last thing I wanted to mention. I'm going to be traveling. I'm going to Colombia, to Medellin. Flying in on Sunday, flying back on Wednesday. If you're in Medellin, let me know. Drop me a note. You can get a hold of me through futurestrader71.com. Actually, that site may be down. Or just, send me a message on Twitter. I know there's one other person down there. But I'll be down there, and I'm not sure if I'll be able to do a Trader Bite on Monday, Tuesday, or Wednesday. I'm going to do my best. I'll have my laptop, but I don't know what it's going to be like down there. So I've never been to Medellin before. This is for business. But I may not be able to do a Trader Bite next week on Monday, Tuesday, Wednesday. But again, I'll do my best. And if you are in the Medellin, Colombia area, let me know. I might be able to squeeze in some sort of a meetup, get some people together and get you all acquainted and actually meet you in person while I'm down there. Okay, that's it. I'll catch you tomorrow morning. Don't forget to hit the like button. Don't forget to subscribe. And we'll catch you tomorrow morning. Take care.